Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets look set to kickstart August series on subdued note. GIFT Nifty indicated a mildly negative start for Indian benchmark index. Let's talk about US stocks. They're rising. Actually, they ended higher rather after stronger than expected GDP report. Meta earnings to aid the sentiment. Let's talk about Asian markets of 5-month high on Friday and have slipped on speculation of BOJ policy tweak. Now, speculation pertains to BOJ dismantling or moving a step closer to dismantling its super easy stimulus policy. Let's talk about FII data. They've sold shares worth around 3,979 odd crore. And let's talk about DIIs. They've purchased shares to an extent of around 2,528 crores. Earnings that we like to watch out for: IOC, Bank of India, M&M Financial Services, Marico, Charlotte Hotels, DCB Bank, Equitas, along with Excite Industry, Nazara Technologies, and Inox Wind and Piramal Enterprises are among some names that are going to be reporting in their quarterly earnings. Let's talk about FNOQs. 11 stocks have seen long build-up, and this includes the like of Syngene, Birlasoft, Excite Industries, beg your pardon, ACC. These are amongst the ones that have seen long build-up. 76 of them have seen long unwinding, and this includes the like of ONGC, RBL, Sun TV, Nalco, Vodafone. 13 of them have seen short build-up, and this includes the like of M&M, Indraprastha Gas, Canfin Homes, Bajaj Finance, and BPCL. Almost 88 of them have seen short covering activities, and this includes the like of Delta Corp, GMR, REC, L&T, and Glenmark Pharma. But let us get going and discuss some stocks and strategy with Jay Thakkar, Head Alternate Research Capital Market Strategy, Sharekhan by PNB Paribas. Good morning there. How are you reading into the markets, levels for Nifty and Bank Nifty, and the strategy you think that the viewers can now look at?
Hi, very good morning to you. And the July series, as far as the Nifty is concerned and the Bank Nifty is concerned so far, so I would say so far it has been positive. Both the Nifty and the Bank Nifty. But then, the kind of weakness which we saw yesterday, from the high levels, we saw that markets were not able to sustain above the levels of 46,000 on the Bank Nifty and above the levels of 19,800 on Nifty. They're struggling to, sustain above those levels. Now, those levels only for the next weekly expiry will act as a very crucial resistance. So for the 3rd August expiry, 19,800. Okay, that's the level to watch out for on Nifty, and 46,000 is the level to watch out on Bank Nifty. Till those levels aren't taken off, the markets will trend sideways, and the range will be 19,500 to 19,800. Well, that's the short-term range, and the medium-term range is 19,300 to 20,000. For a Bank Nifty, the short-term immediate range is 45,300 to 46,000. That's the 700 points range, and a broader range, I would say, Nikkei is 46,500 to 45,000. But then, I don't see, both of these indices taking off their, recent highs. That is all-time highs very soon now, at least in the upcoming weekly expiry.
Jay, the only question I wanted to understand is last 3 August series, we've seen some big moves coming in. Do you think this time August series will be a little different? And probably, like you said, that, you're not expecting any more highs coming in. Do you expect that to play out for the entire series as a trend? The strategy that you think the market participants can undertake just for today in that case?
Yeah, so Nickey, the strategy or the view or the range which I mentioned is for until the 3rd August expiry only. That is till the first weekly expiry of the Bank Nifty. Otherwise, I would say the August series is likely to be positive again. Generally, as you said, August has been positive month, Nickey, and that is what I expect going forward as well. I think that in August there is a very high chance that Nifty might surpass 20,000 levels. See, a net FI long position has come down from 73, 74 levels to now 58 levels. So it has reversed from the all-time high. So now there is not that much of risk that it is already at an overbought territory. We have seen some consolidation happening. So the initial 1 or 2 weeks of August may be, of sideways to consolidation. But then overall thereafter, we will see a good upmove because I believe that the overall global trend is also quite positive, especially in US.
All right. Let's also talk about 3 recommendations from your end, which could be breakout stocks or profitable ideas for our viewers out there. Anything specific that you're looking at? ECC has come out with numbers yesterday, and the numbers were way above the street estimates and also way above the entire cement pack. Overall, I think that's the only company which has managed to succeed or surpassed the expectation. What's your assessment overall on 3 profitable ideas, and how are you looking at ECC?
Absolutely, you see, overall, I would say that cement stocks are doing good, and they are likely to do good as well in the short term. And we have seen a good recovery coming in these stocks. I mean, ECC is doing Ultratech, maybe Grasim, maybe Ambuja. All of them are expected to do or perform positively going forward. I think whatever correction had to come has come already now. And these stocks have now provided a breakout and form a short-term bottom. So ECC definitely has given a very good numbers. I think, going forward, 1800 to 1830 levels is a good medium-term support for the stock. Now, as far as these 3 stock ideas, Nickey, which you may ask, which I have today, they are as follows. Now, Tatacom is looking positive. Tatacom is looking good for the targets of 1800 to 1660 going forward. 1800 is the target, 1660 is the stop loss. The stock has provided a very nice breakout from a symmetrical triangle pattern. We have seen a good long build-up here as well from the derivatives point of view. So even in the falling market yesterday, Tatacom was really positive. I have a sell recommendation on GNFC. GNFC has seen some short build-up, right? That is what we've seen, and technically it has formed a triangular pattern from which it has provided a breakdown. So both from the technical and derivatives point of view, GNFC is looking weak. One can sell this targeting 562 and stop loss will be 575. And Metropolis has come back again. So the stock has provided a good breakout. After providing a good breakout, the stock retested its breakout point and is now again moving up. We have seen a long build-up as well coming on Metropolis. The target will be 1475 to 1500 on Metropolis and stop loss will be 1350. So I have 2 buy recommendations, Tatacom and Metropolis, and a sell on GNFC.
All right, that's the word coming in and some of the recommendations out there. But let's address stocks and news. Essentially, stocks that need to be on your list. JK Lakshmi Cement, Bharat Electronics, NDTV, Lupin, and Rail. Vikas Nigam are some among them. We're going to get back to Jay in just a bit, but let's address JK Lakshmi Cement first, where the revenues are up by 4.6% at a number of 1,730 odd crore. This is more or less in line with what the street was estimating, 1,751 odd crore. Net profitability, a bit of hit, 30.66% down, but still, it's a little below what the street was estimating. Numbers that street was working with was 112 odd crore, and the company has reported 80 odd crore. Let's talk about EBITDA. It's declined by 23% to a number of 196 crore as compared to an estimate of 256 crore. So overall, JK Lakshmi Cement, a bit of a disappointment playing out for that one, at least when it comes to the number front. Let's talk about Bharat Electronics. A bit of surprise coming in on that one. It's better than street estimates. Revenue is up by 12.5%. Number is 3,533 odd crore. Bloomberg consensus estimate was to a number of 3,490 odd crore. More or less in line. Let's talk about EBITDA. It's up by 28%. The actual numbers, 673 crore. And the street was working with an estimate of 550 odd crore. So you can see the difference. Expectation 550, performance 673 crore. So you can see a little bit of surpass, better than expected numbers coming in on the EBITDA performance of the company. Margins at 19% as compared to 16.6% in the corresponding quarter of the previous year. Net profitability has also risen by 47%. Overall, if you talk about just the performance, it's a decent performance, better than estimates. Order book has risen to 653 billion on an order booking of 81 billion during this quarter itself. It's the highest amongst all the defense companies. Do bear in mind that the first quarter is usually a weak quarter for the sector, but the company has not just managed to beat the expectation, but also outperform peers when it comes to the order book performance. Now, let's also talk about other stocks that we have on the list. NDTV earnings. Revenue is up by 4.5%. There's an EBITDA loss, which is only narrowed down a little bit, 9.5% as compared to 15 crore. Beg your pardon, 9.5 crore as compared to 15 crore in the corresponding quarter. The net loss, however, has is grown multifold. 8.8 crore is the number as compared to 1.08 crore. So a bit of disappointment creeping in for NDTV. Sure, there's going to be a bottom line adjustment out there. But if you even talk about EBITDA performance, the losses to an extent have narrowed down. Rail Vikas Nigam, that's another one for you. The government has agreed to exercise the green shoe option, and the company will be divesting in an additional 1.9% stake through green shoe option. Non-retail portion has been 273% demand on day one. Lupin, we are going to be talking about it in just a bit. There's a clearance which has come in on the warning letter by the US FDA. Do remember the fact the stock has already risen in 4% in previous session trade. But let's address the market open for you. Nifty 50, we are looking at gains coming in. August series is not a subdued one like we anticipated, but it's somewhat a flat start with positive bias. That's a bit of too early to actually call it even a positive start. I think markets, it's a flat start coming in for the markets. 19,650 below that level, or 19,700 mark, way below that level right now. So it is somewhat a subdued start like we had anticipated for the August series. No surprises there. Bank Nifty, let's talk about that. Just to see if there is some amount of outperformance coming in on that one. Well, losses there too. 0.25% of loss coming in for Bank Nifty index as well. Let's talk about the small cap index. Let's talk about the mid cap index. We're looking at gains to an extent of 0.1% for the mid cap index. And if we talk about the small cap index, gains to an extent of 1/10, more than 0.2%, close to 0.2% coming in for that one. IT index, well, that is not faring well. Flat start coming in for the IT index. Well, way different than what the US IT stocks are doing, right? There's a bit of decoupling and the way different behavioral trend altogether. FMCG, however, is holding up for you. Gains to an extent of 0.1% coming in for the entire FMCG basket. Pharma is no different. We're seeing gains to an extent of 0.1% out there. In terms of auto index, somewhat flattish trend. Most of them have seen narrow gains coming in, be it IT, be it pharma, be it auto. It is somewhat a subdued start for the markets, and sectoral indices are behaving no different. Let's talk about the top gainers and the top losers that we have on the list. Advances, 21, declines, 29. Market breadth right now in the favor of declines clearly. DRL, Infosys and M&M. These are the top gainers that we have on the list. Bajaj Finserv, Wipro and IDC. These are some of the other top gainers that we have on the list, along with Britannia, Hero MotoCorp and Cipla, which is doing well for the second consecutive session after raising that guidance out for you. BPCL, Axis Bank and ONGC. These are some of the top losers, along with Sun Pharma, Hindalco and TCS. Some of the other losers. But what's really interesting is how M&M is behaving, especially after being beaten down in blue in previous session of trade after it announced that it's going to be picking up more than 3.5% stake in RBL Bank. The street anticipated it to be a non-core investment. Probably there was a bit of a discrepancy when it came overall with regards to the capital allocation policy. A lot of concerns around that, concerns around why it was doing it, concerns around whether the return on equity of this particular investment would be more than 18%. So a lot of street and digest it quite well for M&M. And it is the top gainer in today's session, and RBL Bank too is acting no different. Up on your screen with gains of around 1.5%. It's been in the F&O band category thus far. Remains to be seen how RBL Bank does for most of the part of the week. It's done well even on delivery basis, despite the volumes being a little low. 10% gains have been eked out in the last 5 consecutive sessions when it comes to the RBL Bank. But I'm going to go back to our guest out there, the technical analyst, Jay. Good morning. I'm just going to ask you again about what do you make out of M&M. Thank you for waiting by. And Jay, what do you make out of now RBL and M&M? Do you think it's an attractive bet out there for the investors to lap up the stock? Or you think much of the rally or the damage is rather done for this one?
No, I think it can still continue until the levels of 1350. So 1350 is the level wherein one can definitely enter M&M. See, overall, technically, the stock has definitely, provided a very nice breakout above the levels of 1390, 1400. But then the next swing support is somewhere around 1350. So around those levels, definitely the risk reward would be positive out there on M&M. And as far as the RBL Bank is concerned, see out here, the overall short to medium term trend is already positive. So this one can add now, and one can also add on dips around the levels of 215. So 215 is a very crucial support for RBL going forward, and one can buy this at these levels as well, because the stock has formed a very nice inverse head and shoulders pattern, has provided a very nice breakout from it as well. So overall trend out here is positive. On M&M, it is sideways to negative in the short term.
All right, Mr. Thakkar, we leave it at that. Thank you so much for taking out the time and speaking to us.
Thank you.
Right, let's navigate our discussion now towards broader issues, which is playing out right now in the fundamental market, in the fundamentally overall, pharma sector along with the economy-facing sectors have been doing well. But to take the discussion forward, we're being joined by Sushant Bhansali, CEO of Ambit Assets Management. Good morning there.
Hi, good morning.
I'm going to start off by asking you your assessment right now. Do you think investors can look at pharma sector any differently, given Cipla came up and revised the guidance? You saw a little bit of euphoria finally catching up in pharma related stocks. Something like Cipla did well, Lupin is doing well too. There's a bit of US FDA clearances overall which have come through overall for the sector. Do you think this as a sector in terms of valuation now has more room to outperform counterparts, and the rally is yet to start for these players? How are you looking at it?
Yeah, so pharma has been among the top three sectors performing in the calendar year 2023 so far, behind auto and real estate. FMCG and pharma sort of in line so far, about 18% on Nifty indices for pharma and FMCG for the year. But pharma has been underperforming for almost 5 or 6 years now, bearing briefly during the COVID lockdown period when pharma did really well. But last 6 years, it has been quite subdued. So there are lots of legs probably yet to play out in pharma. And from a 2 or 3 year view, probably pharma looks really good. Most of the issues on the US side of business, I think probably are sorted in terms of pricing erosion or in terms of FDA inspections, etc. We are more and more less hearing FDA related news in the last few quarters. So from here on, pharma seems to be reasonably valued and can give good returns to investors over the next 2 or 3 years.
Sure. So apart from pharma, right now, which themes do you think are yet to catch up in the markets? A bit of exuberance that you think still will be reflected by those particular sectors which haven't done thus far well, but are anticipated to do well, in your understanding?
So IT and chemicals are two sectors. Chemicals more in line with pharma, where for last 2 years chemicals have not participated in the rally at all. More because of the earnings getting subdued after the raw material inflation kicked up, given supply chain disruptions over the last 1.5 years. But China plus one has been a real story for the last 6-7 years in the Indian economy, and we are expecting PLI also to play a big role in the chemical sector. So that again, from a 3 to 5 year view, chemicals looks really good. It has not participated in the last 2 years. Very few companies, I would say, are still at their lifetime high values. Right, and on the multiple basis, they are probably 20 to 40% below where they traded at their peaks. The second sector, IT, has been on and off for the last 1.5 odd years after seeing a great rally in 2021. And as the interest rates are coming down expectedly over the next few quarters, IT sector should perform really well.
So the only concern that I have typically is if within the IT sector, I'm sure along with the retail investors out there, FIIs have been reducing stake, right? Be it in the IT giants, Wipro, HCL Tech. They've managed to show some amount of resilience though. But Infosys guidance overall was also a shocker, where most of the management guided that the recovery is nowhere to be seen in the second half. of the financial year, which is a little different as compared to the guidance that was coming through in the previous quarter, where there was more anticipation of recovering coming in the second half. So, even from a short-term perspective, do you think IT basket is an attractive bet?
So not from a short-term perspective, definitely. I think the challenges, especially given the another hike in US recently and expected for one more hike. On short-term basis, probably IT is not that lucrative, but valuations are reasonable, and the digitization cloud movement, I think, is for real. And India probably will lead the way in terms of getting globally companies and businesses digitized. So the wave is really strong. The earning growth trajectory looks good. It might be patchy in short term, but from a long term view, IT looks really good as a theme.
All right. And if we were supposed to have a little more short-term perspective, sure, as an AMC, I understand that you're going to be looking more on 3 years and 5-year basis minimum. But from more of a retail investor category, if you were supposed to look at that, what do you think is a sector which continues to perform well? Do you see more traction coming in for banking sector, which thus far have stolen the show? NBFCs have also been performing. PSU banks have also been performing. Could you put that in pecking order for us as compared, based on your preference? And any other sector, barring banking, that you're looking at for short-term perspective?
I think from a short-term perspective, from in the balance of the 2023, both auto and banks will continue to participate and do well. The earnings momentum is really with the sector. Autos have probably yet to get the peak on a few of the categories which was achieved in 2018 and 19, and they are in a good shape. And banks and NBFC all are, I would say, the credit growth continues to be robust, while asset quality seems to be nowhere near the to turn around and start getting some bit of patchiness, which probably will be probably about a year or 2 years away from that perspective. So auto and banks, I think from a short-term perspective, really good. FMCG should also do well, given that margin recovery will happen. The margin expansion has been happening for last quarter or so, and that shall continue for the next couple of quarters. So despite the volume growth not being that high, the margin expansion should drive the earnings for FMCG sector. So these three will be probably the best sectors from a short-term point of view, in our view.
Sure. Also, let's talk about overall, how do you look at the valuations of the markets right now? Do you think they're a little bit stretched? What is the direction and the trajectory that you're looking at for the markets? What kind of levels you think market is a little bit in the overbought territory? You expect some correction to come through for the markets? Overall assessment in terms of the FII trend, which thus far has been pretty supporting for the markets.
Yeah, so definitely after FIs pulled money out post September 2021 quarter, right, there were a lot of correction which was expected given the huge outflows. But the domestic investors came to the savior. For first 6 or 9 months during that period when FIs outflows were big, the domestic investors, especially retail investors, came out quite nicely. Over the last few months till about March, so from July, August 2022 till about March, the flows started softening a bit on the domestic side, but then FIs came to the rescue, and for last few months, when FIs have participated, retail investors and domestic institutional investors, also the flows have increased quite nicely. So we expect this trend to continue, given that interest rate regime should peak out, or we are near towards the near of the peak. And as interest rates subsides, global flows will continue to come to countries like India. In the global pecking order, I think India is shining with the growth rates which it's offering, and I expected all the global institutions are only increasing the growth forecast for India compared to other emerging markets. So both global equities as well as emerging market equities will be getting good flows, and India should be a natural beneficiary for that. And if you look at the valuation multiples, Nifty is trading not more than 20 times 1 year forward, which is probably closer to the 10-year average. But we have seen the previous peak in September 21, we were trading more 23, 24 times 1 year forward. And from that perspective, there's still lots of juice which is left. And if FPI continues to participate, then we'll have more legs to this rally in the next few months and quarters.
All right. I wanted to chat a little bit stock specific with you, especially the one development which has taken place between M&M and RBL Bank. As an AMC, how do you view that? Because it's a bit of non-core investment which has taken place, and there's this concerns which have resurfaced around the capital allocation for M&M after the investment in RBL Bank, which any which ways has seen in the last 1 year change of guards, change of CEO. How are you looking at it right now?
Yeah, so typically that's why we try to stay away from conglomerates. All these conglomerates, you don't know which business you are buying, and valuing them becomes really difficult at different points of time. Capital allocation amongst conglomerates has been, I would say, at times they consolidate, at times they diversify. And these capital allocation decisions have to be more seen from a long-term point of view. As well, but market I think reacted quite differently if we look at the market's reaction yesterday on a few of these conglomerates capital allocation decisions. But from a perspective of the targets, probably small shareholding change should not change anything meaningfully on the strategy or the execution side.
Sure. So as an asset management company, if you're not looking at a conglomerate as big as size as this one, then where is the investment typically taking place?
So we typically like to invest in operating businesses. We don't prefer conglomerates or holding companies. We typically want to be as close to the cash flows as possible.
Any particular company that you would like to talk about that the AMC is particularly gung-ho on right now? Or a group for that matter?
Yeah, no, so we have almost 50 plus companies across all our portfolios. We run 4 equity schemes on the PMS side. And the common thesis across all these companies is that they are good and clean businesses where we have done a lot of work on forensic accounting to see how true their financial statements are reflecting the real business position. And in the last 8.5 years of our journey so far, we never had a single accident where we invested in a company and either because of fraudulent accounting or because of corporate governance matters, we have to lose a lot on any particular stock. Going stock specific in terms of what are the sectors we like, probably I'll not be able to take stock specific names due to compliance reasons, but consumer discretionary building materials are few of our key themes which have helped us deliver great returns for our investors. And there are lots of, I would say, upcoming businesses which are right now, say about ranging between 500 to 2,000, 3,000 crores of revenue size. And as India grows forward and we have a $10 trillion economy, which comes through in the next 12 to 15 years in India, there'll be lots of consumer discretionary spend, which will happen right from the mass consumption at the footwear, apparel, etc., to right till high end towards the jewelry and other segments. So those will be our preferred place from a long-term view in terms of the opportunity which India gives to investors.
All right, Mr. Bhansali, get your point, and thank you so much for taking out the time and speaking to us this morning.
Thank you.
Right, pleasure was all ours. But with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.